We're joined by Mr. Mangesh Chauhan, who's the MD and CFO of Sky Gold, who's joining us now. Welcome to the show, Mr. Chauhan. My first question before, I go to company specifics is that we're seeing a lot of traction when it comes to gold demand. We're seeing gold prices hitting new highs, fresh highs every day. What are the kind of trends that you're observing overall in the gold sector, and what are your expectations going forward?
So, good morning, everyone. 100% gold sector is very boom right now. Naturally appreciating asset it is. So, it has given a very good returns in 5 years to the consumers. It's about 120% return in 5 years. So, after the duty cut done by our finance minister, there is a very huge footfall in the retail sector of the customer. There is a pre-Diwali session going on the retail because consumers are rushing to buy the gold as there was a 20% duty cut in the market. So overall scenario is very good as gold is given a good returns to the consumer. Consumer are happy with the returns. So overall corporates are going very much. The unorganized market is shifting to organized. So gold market is at a very good phase right now.
John, I've picked up three things from what you've said about. I'll take one by one each of these things. First off, you said that, the slash in custom duty has really helped, pick up in the gold demand, which was kind of subdued before that because of the high gold prices. But gold prices are again on the rise. So, if you can help me quantify as to, how much of a benefit that custom duty has actually brought in, and will it continue going forward? Mr. Chauhan, so my question to you is that you've mentioned that since the custom duty rate cut, we've seen that the demand for gold is back. So I want to understand that if you can quantify that, how much of that is benefiting you as a company. Plus, do you think that this will continue because gold prices are on the rise?
So 100% custom duty has helped the retailers as we are supplying to the corporates, all the corporates in India. So like Kalyan Jewellers, Joyalukas, Senco Gold, Thangamayil, all our clients or more big clients are going to be added. So they have benefited to the consumers. Consumers are flowing into the retail, and once again the orders are coming back to the factories and manufacturers. So again, the point that gold is rising, this is a good point for the consumer because consumer are buying gold jewelry heavily. Because of this is appreciating nature. If gold is appreciating, they will buy more as they know that they will get the good returns in 2-3 years time. So as per Bank of America statement that gold is going to be $3,000. So they are customer are right now also buying the gold in heavy quantity because their expectation that gold will reach $3,000. So they don't want to miss the opportunity of gold price. So they are helping to the retail corporates also, and by again the manufacturers are gaining the share from there.
And how are you seeing festivities demand pick up?
Sure, festive demand is very good. Navratri is in this quarter. Diwali also fall in this quarter. So December quarter will be, I think, tremendous for the corporates, all the corporates and the manufacturers like us who are supplying to the corporates. So this quarter is expected to be a growth of 25 to 30% at the retail level they are expecting. So festive season is very good, positive. Customers had good cash with them and in a good mode to buy the jewelry because gold has given a good returns in last 5 years. They are expecting that it will be keep going. The returns will be keep giving them in the next 5 years.
Got it. Mr. Chauhan, now let's talk about Sky Gold as a business. Right now your business mix roughly is from corporate, 65% of your revenues come, and others is 35% right now. But what you've guided for is that you'll elevate the corporate business to almost 100% in the next 3 years. So I want to understand that what are the kind of levers that will take, your corporate share from that 65% to 100%, and then overall, where your margins are roughly at 6%, hovering around that 6% mark, where will the margins go?
So coming to the point of the taking the 65% market share to 100%, we are already expanding in the corporates in like Dubai, Singapore, Malaysia. We have started exporting to the corporates of Dubai who have 200, 300 stores, who have large store in Singapore and Malaysia who have 5 to 10 stores. So the share will they will also play in this role. And of course, in India, we are expanding in existing corporate also and acquiring more large corporates in 2 3 quarters. And you can see they have announced 500 new stores are coming in 18 months from all the top 20 corporates of India. So we will be supplying the gold in approximately 80% store. We will be supplying our jewelry in 400 store, new store. And we are again expanding our wallet share in existing stores like existing which are 1500 stores available. We are supplying to the corporates. We'll expand our wallet share in that also, and our revenue will come from new store also. That's why we are targeting in 3 years. We'll be targeting 100% into the corporate zone. Again, the market share will gain from exports also. Will gain the share.
All right, and then margins, do you expect margins to expand on the back of this? Right now they're at 6%. 3 years down the line, where will the margins be at?
We are expecting gross margin. We will sustain up to 6% in the coming years, but PAT margins will improve 0.5% as we are about to save our finance cost. We are moving our debt to gold metal loans. That will help us to improve our PAT margins by 0.5%. So we are targeting our PAT margins to grow up to 3.5%, but gross margins will be 6.5%. We can sustain it.
All right, and Mr. Chauhan, you're already supplying to big pockets like Kalyan Jewellers, Joyalukas, Senco Gold, Thangamayil Jewelries, all of these big pockets. But the biggest one, that is Titan. And from what I understand is that you were in talks with Titan to get their part of business as well. Any progress there?
They are not our clients right now, but we are continuously showing them the products. Already we are in talks with them. So we have a huge manufacturing facility. We have a timeline. We have a inventory time of 20 to 45 days, which is very lower in the industry. So we can supply them into 25 days. But let's see, in 1 or 2 quarters we are expecting to onboard them.
So 1 or 2 quarters you're expecting to onboard Titan as a client. That's a big step, Mr. Chauhan. Let's also talk about the recent acquisitions that you've made. To name Star Mangalsutra and Sparkling Chains. Give us more details as to how this will add revenues to your overall business, and where will this take your business?
So 100%, our parent company is making a casting jewelry segment, which is 30% in retail store. You can see 30% casting jewelry is sold. Mangalsutras are sold 15% in the retail store. 20% chains are sold. So we will be in 60% product which are sold in the retail jewelry. We will be in 60% with this through subsidiary and with parent company. So in Star Mangalsutra and Sparkling Chain, we are expecting this year sale 600 crore together. And next year we are expecting 900 crores. So let's see. About the 3 years we have already given the guidance. So we will be growing 30-35%.
So then your guidance of 6,700 crore, does that change? Because if you're expecting 900 crores itself from the new acquisitions, do you think that you'll be able to do better than that 6,700 crores?
No, already we have given together with the subsidiary together. The guidance has to be with the subsidiary together.
All right.
Cannot give the much data about that because of the limitations.
All right. All right, no worries. Mr. Chauhan, your current capacity utilization stands at roughly 45%. And this, I believe, is excluding the acquisitions that you've made. So I want to understand going forward, by the end of FY25, where will the capacity utilization be at from that 45%?
So we right now in the current year we are at 50% utilization, and by 2027 we will be at 100% utilization in the parent company, and subsidiary we are at 25-30% utilization. So all the three will be at 100% utilization by FY27. So we have a capacity together of 1,050 kg per month with all the subsidiaries. So currently we are at 50%, 55% utilization in the current year. So we are expecting to go to 100% in 2027. So from to altogether, we have a capacity of 1050 kg per.
All right. So you expect that 50 to 55% to go to 100% by the end of FY27. Is that correct?
Sure, sure.
Okay. Moving on, when we talk about the jewelry sector, we always talk about the organized and the unorganized sector. And, we are seeing a shift where, the clients, the customers are now moving towards the organized space because of trust, because of quality and everything. So what is the kind of trend that you're observing there, your observation in terms of demand as well as pricing?
100% in India, you can see 5 lakh crore market is organized, unorganized market, and 9 lakh crore is expected to be unorganized. So there is a huge market share of unorganized which can be captured by the corporates, retail channel stores. So I think there is a huge drastic shift into unorganized to organized, and after this duty cut, they were expecting in 5 years there will be organized market of 65%. Now we are expecting that in 3 years only the 65% organized market will be there. So there is a last shifting into the organized market because of this duty cut.
All right. And Mr. Chauhan, right now, your R&D department, you've said that you introduce 2,000 designs every month mostly. So I want to understand the breakup in terms of how much do you spend on R&D as a percentage of sales? How has that shaped up overall, and going forward, how is it shaping up?
Okay, so we have a R&D team, merchandising team, and we are approximately launching 1,500 to place design. Looking about the state-wise, we launch design because there is a different taste of Andhra, Karnataka, Kerala, UP, Delhi. So north taste, south taste, or in India there is a different taste in every 200 kilometers. So we launch different designs for different sectors. So we have a good R&D team, management. So every year, every month, we are creating expenses of approximately 80 lakhs to 1 crore for the marketing and R&D expenses.